Hi there, traders. This is Brad Gilbert. Now, I want to give you a preview of the upcoming ECB interest rate decision, right? Now, there's a couple of things. Obviously, they've got the ECB interest rate decision, the statement, and then you're going to have a press conference afterwards. So understanding what's forecast is a key to this, right? So there's no change of interest rates expected at this meeting, right? I still think there could be a surprise 0.25, but it's important you understand what is forecast in the market, right? So what is forecast is their plan, right? Their stimulus, end of their stimulus, pull the plug on that. And there's going to be, a string of rate hikes over the coming future, year or two. So the market expects that, right? And they've already been talking about it. So they're going to expect forward guidance. We are going to be raising rates. We're going to stop throwing cash around. Now, the only thing that the market wants to know or where the moves will come from, it's the size and speed of the tightening, right? That's the stuff that we want to know. So when it comes back to sort of gauging, how do you attack this? Well, there's a bit of structure to it, right? So we know there's no change of rates expected. So then it's just the size and speed. Now, so basically what the market is expecting, right? Zero change here. Right. And then they go, okay, next month, we're going to be raising interest rates, or very similar to what the RBNZ did a couple of weeks back. What month are we in now? June. They might say by September, interest rates will be up by 0.5%. The following January by another half, and give us some levels to work towards, give us their overall plan. Right. And it may actually be by July, August, we expect to raise by 0.25%, whatever it is. Anyway, any sort of forward guidance, depending how aggressive that is, we'll see the euro move, right? If they start to say that interest rates will be higher next month, and then the month after, the market's got a clear plan to work towards, and it will be factored into the currency straight away, and euro will rally, right? So it's just the size and the speed of those moves that will impact where euro, how high euro goes, right? Now, there's no chance at this stage them not doing something like that. So as I said, if they are very aggressive, so they go, we're going to be up 0.5% in a month, another 0.5 like the Fed, well, euro is going to rally very aggressively, right? But if they come out and say 0.25, it'll go, but it won't have that real big kicker unless there's some big numbers at the end of it. Now, so that's the general forecast. So we have to sort of see the statement. What we could see is a surprise, right? We've seen a lot of central banks surprise the markets. So they come out with like 0.25% and then an aggressive plan. Well, that's a double whammy, right? You're going to get the interest rate hike that hasn't been factored in. Euro takes off immediately. And then depending on the size and speed of the hikes for the future will determine how far it runs. But a 0.25% increase should see euro rush to the top side against the dollar, and against all the other crosses. I'm sort of going with that. I'm going with the surprise, right? Because you know what, the plan, an aggressive plan, that'll be great, but it's nothing real. The market always loves the first move. Now, there's a couple of things you can do here to get yourself right up the curve. Now, one is you should be checking out all the central bank sites, especially when it comes to these meetings. The ECB, I've got to say, I haven't looked at the site for a little bit, has done a great job on their website. It's very easy to understand, work out what's going on. You've got all these links at the top. Monetary policy is the one we want, or you can just come over to the side heading here, come down to monetary policy and hit monetary policy decisions. Well, you can see the schedule of the meetings. There it is. It's coming up today. So you go, okay, that's super cool. But what you want to do is you want to read the decision as soon as they come out, right? So you get the statements and transcripts, monetary policy decisions. You can come in here. They will post it right on the second of the hour at 1:45 European time, right? So if you haven't got Metastock or another news service, you can quickly click in here, get the monetary policy decision, see what they've done. I would key interest rates. You can see here what the plan is. But you'll already know, because if they've raised rates, it'll already be like 70, 80 points higher. Then it may sort of jump around. If there's no change of rates, it may jump around as the market quickly tries to digest exactly what they've said. So, so I would be reading the bottom paragraph first. Don't even worry about the other stuff, because if you know what the interest rate, if there's a change or not, that's one thing. You need to get the summary of what are they doing in the future. So inflation stabilizes at its 2% target, right? Now, this is the thing. So you're like, and this is like all the central banks, they're talking about this stuff. But if you come back to the homepage here, and they've got, as I said, they've got some good links here. So I've just scrolled down here, inflation. You can see inflation's up here, and they're like talking about a 2% target. It's like, if you go to the inflation dashboard and get this up, this is where I'm starting to think, and you can build a bit of anticipation around, okay, they're talking about they want to get back to a 2% target. Well, okay, check out where inflation is now. So is a surprise rate hike out of the question? Not at all. In fact, like the RBA did yesterday, was it Tuesday? 2 days ago, they surprised with a 0.5% to try and get ahead of the market, because inflation is racing. Inflation's racing here. So there's a very good argument for a 0.25% rate hike straight away, right? Give them a taste of what's to come and then give them a plan. That's what we've been seeing with all the central banks. That's why I'm starting to sort of plan on having that move. So once again, you come over to the homepage, you get to monetary policy decisions. Click on this link here. You'll find the stuff you're looking for. Okay, so that's where they are. Actually, one of the other key things I usually do is, if there's any media, we should see a link, press releases, sorry, there it is, press conference, right? You should actually come in here and find any press conferences. If there's a press conference, 2:30 on demand. Okay, so you can actually sort of check that out after the meeting. Click on here. You can come in and watch the most recent press conferences, and they'll have those set up, ready to go. All right, so that's the ECB. Now, so you can sort of work out what's going on, where the plan is. I'll show you what some new cool features I found in Metastock here in a second. But one of the other key things that you need to be doing is, okay, you've got this, that's great. What do we trade, right? You've got a number of things. You've got the euro, okay, and all the euro crosses, right? And once again, when the euro goes, it will take sterling, Aussie, Kiwi with it, right? Because if euro rallies, the dollar's weakening. So when we do come back and have a look, you probably also want to have a look, if you've got a chance, or if you like them, the European stocks or DAX, European equity markets, right? Very much like the North American equity markets. A rise of interest rates sees the equities come off. It's the same principle, right? So to me, there's some major pairs, right? The ones that correlate with the euro against the dollar, so sterling, Aussie, Kiwi, but mainly the euro crosses will be the key to it. All right, so now just have a look down the bottom here. I've just got the euro up here on the hourly and daily. Now, there is a cool feature here you can sort of start to mess around with, adding economic releases. So what I've got here, if I just make it a bit bigger, actually, I've got the euro, right? And you can see here and this is going back, this is the ECB meetings, right? Going back to, well, 2021, right? Since it peaked, right? See, there's a cycle here. You see the central banks, they come out with a catalyst meeting, which turns the tide. Well, they did that in May 2020, and the euro started going up. Now, stalled, the US dollar's gone nuts, and they're sort of not doing anything. So you can see the cycle here of their meetings where, euro is just going down. We're now at this point here. I'm thinking it's going to be more like this one here, where we start to see the euro start to come back, right? Now, it's got to battle because the Fed are raising rates as well. So really, this is going to be a better one to look at on the crosses, but I'm banking on the ECB doing something aggressive, and we see a topside move, and we start to see these meetings like here where they start raising rates, right? Not that they're raising rates there, but their their forward guidance, and they will be actually raising rates. So we should see the euro's fortunes change. Okay. Now that every central bank is going to be raising rates, we're going to be seeing a lot more trading opportunities across the board. Okay. So really, if you haven't been trading the crosses, now is a very good time to get yourself up the curve, right? Because you're going to see the same cycle here. If I just change my pen over, okay, see how the trend of the currency is determined. I mean, if you're telling me, like I see these technical analysts out there saying, oh no, it's the technicals that drive the market. It's like, well, okay, well, look at these meetings, right? Every central bank meeting has led to the euro going down, and that's the key to it. Euro yen being the odd one out, and that's because the yen is its own sort of weird neutral safe haven or negative pair. Euro Kiwi, okay, you can see the little changes here also from changes of when the RBNZ are doing things. But overall, you can see structure here around what's going on. So this is the crosses. So if there is a change of, focus, interest rates, etc., monetary policy from the ECB, we should see a significant, like they haven't done anything for 10 years, right? So this should start going that way on the crosses more so than the dollar, right? Of course, you have to weigh in the other central banks, right? Because if you're looking at, where's Euro Aussie up here, right? We did see, okay, the Aussie central bank come out and do some stuff. You're going to be weighing up central bank action against action. But to me, the Euro sentiment overall will become positive, right? And that's going to be good overall. So you can actually sort of go through that and check it out. Now, obviously, if you're looking for key levels on your crosses, you're going to be going into your hourly charts to sort of find out what's going on. So going into your daily charts, there's a really good way to work out, okay, what's been happening with the ECB and what impact has it been having on the currencies, right? So then you come back, you go into your hourly charts, see if you can find some key levels that are close on some of these pairs that have good technical structure, and they're the ones that are potentially getting into, right? So you want to be doing that across the board. Have a look at the dailies, try and incorporate, get an idea of what's been happening over the course of time with the ECB and what impact it has on the instruments themselves. And then it's going to give you a good, just makes you more confident to go, well, if they're raising rates, they haven't done it for 10 years, wow, this is going to really impact the euro upwards. Now, the euro is the big brother of all the other pairs, right? So you would expect it to come through with a lot of force. All right. The other one is, if you come back to the equities, as I was just saying, like there's key decisions here. And if you look at the stocks or the DAX, right, to European equity markets. Now, let me just show you how I added those events. So if you come down here, right, so say I want to go Eurozone, central bank, maybe refinancing rate, just add those two things in. So what I want to see is what impact does the meetings have around that? Now, you can see this one here pop up. Don't forget, they haven't been hardly doing anything. So when they don't do much, one of those, oh, okay. So I think the last meeting, right, they came out and they said, you know what, we're getting closer to potentially having to do something, right? Which gave the euro or the equities, they fell off a bit, which meant they were potentially going to raise interest rates. And then nothing happened. So the equity markets dribble off. Nothing happens. So equities rally to the top side. Now, what I would expect, you see this, you get this little C here. The markets are already anticipating it, and you get a big move to the downside on the equity markets, right? So that's your core signal there. Why isn't that color changing on my thing? So that's where we are with that. I've got the cursor up, that's why. Okay, so you've got the DAX. You'd also expect the European stocks to get impacted. I mean, you'd also expect the FTSE and everything to sort of fall into line. Okay, so that's one really good thing that you can do is get this central bank stuff up. I've actually tried it on a number of different other instruments as well, but for some reason, I don't seem to have access to it, or it just doesn't update. I think this is a relatively new feature, so which I like. That TradingView is doing, but so you can see here once again, even with the DAX, same impact as the stocks, right? Just think of the equity markets as one big thing. They're just in different locations and associated with different currencies because they all do move together. So that's where we are on the equities, right? So, but once again, when you are looking at the equity markets, see how they're right here, they're sort of in the middle of nowhere. So if you can isolate the technical levels here, then you've got something to work with. Now, all these instruments, which is the best thing about over the last 10, 15 years, is they're all trading very well together, right? So I'm not really keen on raising, just putting that resistance level at the top, because all I'm trading really is that top level. So and that's only going to go up if they don't do anything, as in they don't say if they don't come out with a plan. That is not going to happen. They are going to either do no rate rise and an aggressive plan, or a surprise rate hike with an aggressive plan, right? So to me, the only way is up. Speed and timing is all we're looking at. So here we've got a level, or because you know right at the time of the release it's going to kick off, you could be looking to try and get in a little bit quicker. But don't forget, at the time of these releases, especially on an interest rate change and everything else, it's going to be explosive. You need a big wide stop just to protect yourself, not against trying to put extra risk into it, but to try and keep you in the trade as we see what's going on. If you want to trade the release, trade close to the release, small trade size, give yourself a bit of room to manage the volatility around the release, and then get ready to hit it afterwards, because the first trade is to get you in and get you rolling, right? If you go in with a big trade and the volatility kicks you out, well, then you're going to be spewing. If it's a small trade size, at least you're in, and then you can add to the position as soon as the market settles down and starts kicking through some levels. That's the smart way to play this, right? So whether you're trading equities or any of the euro crosses, right? A lot of them may not have a lot of good shape, right? So euro sterling, okay, I would be expecting that to go up. Euro Swiss, euro Aussie, euro Kiwi. Euro Kiwi's already going up. The euro yen's already going up with the yen weakness against the dollar, and euro CAD. Well, this sucker here just weigh up what's going on. CAD's been rallying through the roof because of oil. So does this rally the top side? I reckon it would, right? Especially short term. So you got a load of pairs. By doing your technical analysis on the crosses, you will isolate the best pairs to be trading, right? Now, just coming back to the main screen, what you also have to be doing or measuring is come back and actually have a look at what's happening in the market. So like the perfect profile here, because I'm expecting a surprise rate hike and I'm expecting an aggressive plan with a fast speed of rate hikes coming up. Ideally, you want this going up, right? A risk on profile, which would be pushing euro, sterling, Aussie, Kiwi higher and the dollar down, right? Because if they come out, so basically what I'm saying is you need to weigh up, is the current sentiment in the market going with the ECB or against it, right? Because if the sentiment here is down, it doesn't mean the euro won't pop to the top side, but it might take a bit of the edge off, right? So always get a feel for momentum. So before the release, if you can, get in front of the screens about 10 minutes beforehand, get a feel for what's going on. You should already isolate a few hours beforehand what instruments you're mainly looking to focus on. So that way you're not getting here and getting flustered. Already you're thinking about execution. Okay, this is a big event, maybe a small trade size, get me in, or be smarter, read the statement, see what they do, read the statement and then trade. As it was with the RBA, I tell you what, 10 minutes is a hell of a lot better. The Aussie surprise with a 0.5% rate hike, it rallied 70 points and then it came straight back in its face. So don't think the move is on, it's going to last, right? Stick to some profit levels to lock in some cash because it can turn around, right? The ECB meeting is the big catalyst for the move. I think it's a change of sentiment. The key to it is the rate hike, the surprise rate hike. If we get the surprise rate hike, it's a big opportunity. If we don't, well, it's going to depend on the speed and pace and the size and speed of the future rate hikes. If it's aggressive, the market will move, but it's not going to be explosive. And we've got a really strong dollar. situation. So that's fighting that. So euro against the crosses is probably the best play. Don't forget, this will all be forgotten about, everything that happens here, until when the US CPI number comes out tomorrow, right? So that's the key to it. If the US CPI number matches up with what the euro sentiment is from the ECB, that's the easiest trade, because this is a number, right? We don't have speeches, press conferences, statements, blah, blah, blah. This is a convoluted event, but to me, there's big potential, because I think they could surprise us with a rate hike, aggressive stance, go hit the market. Euro will rally. And when you look at the majors, right? So don't misunderstand me. Like, this euro here has a great level to be trading topside, right? I'm not even talking about the downside, because I can't imagine they wouldn't do anything. It would be down here somewhere if they didn't do anything. So that's going to go topside. So it should take sterling, Aussie, Kiwi with it. But just make sure, check the sentiment of these pairs, because the sentiment of these pairs is already down, where sterling's a bit more neutral. So I'd probably leave Aussie and Kiwi out, because they've got such negative sentiment. They'll rally back, but they're not going to go with force, where sterling looks like it may go with it. In fact, euro sterling may be the trade to get onto here. So it's got a bit of momentum topside. Euro Swiss definitely has. Euro Kiwi, well, actually, with that negative sentiment, check out the crosses there. Euro Aussie, Euro Kiwi. I mean, the crosses on a surprise rate hike are going to explode to the top side. Once again, don't be a lunatic going with big trade sizes, because the volatility will the liquidity will disappear, which widens out the spread. You can get taken out on your stop, even though it's higher, because the spread's so wide. And that's what you've got to avoid. All right, so that's where we are, guys. It's interesting, because we've had this whole cycle of central bank meetings, ECB meetings. They've all been pushing the euro down. See, we've got a base here. I think it's time this sucker starts to head topside. Of course, it's going to be a battle against the US dollar, but we'll know more by Friday. US CPI numbers. If those CPI numbers top out, well, then the euro shoots and gets back to 110 very quickly. All right, that's it, guys. I'll post this online. If you've got any questions, fire them up, and we'll see what we can iron out. Cheerio.